Hi everyone, welcome back. In this video, we are going to see the technical side of the sequel of last video, which I was talking about the recession, the yield curve inversion, the global macroeconomic points we discussed, and the multiple different scenarios in different times, how it was related, right? So all those things we saw in the last video. And in this video, we are going to see the technical side of the other side, right? So that we are going to see in detail. So how this is the complete Nifty chart, monthly chart. This is the complete Nifty history from the beginning to the current stage. So before jumping directly into the technical discussion, so please, if you have not subscribed to our channel, please subscribe and give likes. And if you need any other learning video or anything, please let me know in the comment box. So here, so whether the recession is going to happen, we don't know. What technical is saying, we will see in a couple of minutes. But yeah, so recession, it's the indicator from the US side. It's nothing from India. So India is doing way better than US, and we don't have any of those parameters. But the thing is, when US sneezes, all the other countries will get cold. So that's how people used to say, right? When because that is the supreme, that is a mother market, they say, right? So that is a market which the whole world is having dependency on. So if something happens, some recession or anything happens to US market, then definitely there will be some impact to all the other economies, right? Economic countries. So that's why it is very, very important to observe what's happening in US market, what is the different parameters are affecting how it is positioned. So all those things we need to see, because we are all like interdependent, right? So all the other parameters we saw in the last video, and how it is like different parameters are showing that there may be some recession sooner or later, maybe this year end or next year end, we don't know, but there may be some recession. That's what the indicator says. Now let's see like what the chart is saying, right? So before starting the analysis, I will just for like 1 or 2 minutes, I will explain about the Elliott Wave concept on a very, very high level. I will not go into the detail. I will just explain about the Elliott Wave structure on a very high level. That will be easy for you to understand what the analysis what I'm going to do, right, on this monthly chart. Okay, the very basic thing. First thing, the Elliott Wave in the Elliott Wave concept, always there will be two phases, right? The first phase will be in the uptrend, there will be 5 waves. So this is called wave, right? Wave 1, wave 2, wave 3, wave 4, wave 5. So during uptrend, we will see 5 waves. This is called impulse waves. So starting from let's say 0 to 1, this is called impulse, and this is corrective phase. So impulse wave, corrective wave, and then again impulse wave, wave 3, impulse wave, again wave 4 will be corrective wave. Again from wave 4 to wave 5, it will be impulse. So always there will be 5 waves in an uptrend. In the bull run, let's say like in the bull market, there will be 5 waves: impulse, corrective, impulse, corrective, impulse. And then once, so this is the, we can call it as like accumulation phase. In the other terms, this is accumulation phase, and then this is the markup phase, like the rally, the bull run, right? Typical bull run. And then this is the euphoria phase, where the market is at the peak, and then the bear trend starts, right? So that will be with major like ABC, 3 waves, A, B, C. So this is again on the downtrend or bear market, we will see 3 waves like A, B, C, and this will be impulse. So when in the uptrend, this wave 1, this will be impulse, that will be called as impulse, and this will be called as corrective. But in the bear trend, from here to here, this will be impulse and this will be corrective. So whenever we are in the bear trend, when we say like there will be a small correction, which is the pullback. It is not the correction, typical this correction. It's falling from the top to bottom, right? That is not the correction in the bear trend. In the bear trend, when we say correction, it means a pullback rally, because the overall trend is downtrend. Any correction, which means there is a small pullback. So that is called corrective wave, right? So this is impulse, corrective wave, again impulse wave. But in bull run, impulse, corrective wave, again impulse wave, and again corrective wave, and again impulse wave. So this is the very basic understanding we should have about Elliott theory or Elliott wave. Again from here it will start, the next wave will start, right? So from here again this will become 1, 2, 3, 4, 5, something like this. Again the next wave will start, again this will go on, again there will be one bear trend, the corrective, the entire corrective phase will start, again there will be one bull run. So this is how the typical market cycle happens, right? So this is the accumulation zone, and then it goes, then the distribution zone, right? Distribution zone here, and again FIS, the other institutional players, they will be start accumulating from here, and then this will again go on. So this is the cycle, typical. So this is the typical cycle on the Elliott wave, right, with different wave structures. Okay, so this is the basic about the Elliott wave, and there are lot of different structures. Like we have this corrective, we have different types of corrective structures, simple, zigzag, like that. We have so many different types of corrections, and there are multiple rules. Like wave 3 always will be fast and the lengthiest one, and wave 4 cannot overlap wave 1. Like that, there are so many different rules for all these this entire Elliott wave. So we are not going to the detail of the each and every wave structure and what are the different types, so all those things. But so I want you to understand the basic Elliott wave concept, and so let me clear out all the drawings. Okay, now let's look at Nifty's chart. I mean Nifty monthly chart. You can see here this is starting from 90 till now, whatever the complete history of Nifty. Let's start counting, right? So let's apply this wave count. Wave 1, 2, 3 here, 4 and 5 will be completing somewhere in the top. So as per my analysis, this is not the bottom. We are going to see some more rally on the upside. We will break the recent high, right? And then it will go further, where we will complete the wave 5. This is my reading. So Elliott wave is all about different ways, like people apply these wave counts in different ways because it is little like tricky. We need to follow the complete rules for each wave based on the structure, and then we need to correctly count. So for me, and as per my understanding, this is the wave count, and so this is the wave 3, right? So within this, we have 5 more waves. 1, 2, 3, 4, and 5. So this is wave 1, wave 2. In wave 2, we can see ABC correction. Here it will be like we'll see 1, 2, 3, right? So 1, 2, and the third wave completed here, and then we saw fourth wave 1, 2, 3, and fifth wave is going on right now. Now let's understand fifth wave in detail. Let me go to the weekly chart, weekly time frame, and so fifth wave started from here after the COVID crash. It started from here, and we are in progress, right? This is not the it didn't complete yet. So let's start counting the fifth wave. So from here to here, wave 1, wave 2, wave 3, and wave 4 is in progress. So this may, or we don't know whether it completed, wave 4 completed here, or it may go down further. We don't know. That we will see soon. And then wave 5 will be somewhere in the top, right? So let me, so how much this will be, it may be, so we have some calculation. We need to have the projection properly. Let me first complete on the wave 4, right? So where are we? So so within this wave 3, let me apply the count from here. 1, 2, 3, 4, and 5. So this is the 3-wave structure, 5-wave structure from here, and we completed 5 waves here, which is the third wave, and fourth wave is in progress now, right? So fourth wave, usually it has to project 38%. So as per that, if we see, it has to complete somewhere near 14,000, let's say like round number, like 14,500 is the range where we can expect, because already 23 percentage retracement, it already broken that, and we are trading way below. So last week it gave some positive momentum. It might continue next week also. Uh, but ideally, we might complete wave 4 somewhere near 14,500 as per this analysis, right? And from here, we might start wave 5. So from here, we will see wave 5 starting. So this may be the base. That's why like it might fall. I was telling in my Telegram group multiple times, we are in the bear trend, sell on rise market, and once we reach this level 14,500 range, then that's when we will be able to we can conclude, like we need to see how the base is getting formed here, and we might start wave 5 from here onwards. So that's why this is a very, very important level. Around 14,500, 400, 500 range is where we might get the bottom. The recent uh, sell off, whatever we saw from the last October onwards, it might end somewhere near this level, 14,500, and from where we will start wave 5, right? So it is the best time to start our investment around this level. Maybe we can start from now onwards, which I have personally, I have started my investment already for last couple of weeks, and I will continue doing this. And wave 5, once it starts, we will start getting uh, all the stocks recovering, and we'll see the benefit. Now, what happens if in case we are breaking this level, right? So if in case we are breaking down in from this level and going further down and closing on weekly time frame, then this entire wave count we need to study again. We need to check the other possibilities. So as I told, Elliott Wave is all about different possibilities, and we need to recount when something goes wrong. We need to recount the waves again and apply the rules again, and then we need to see the other possibilities. So before going for the second possibility, let me complete where the wave 5 might complete, right? So usually wave 5 will project 38 to 61 percentage usually, right? So let me show the projection from here to here. So this is wave 1, 2, 3, and from here, if considering the wave 4 will complete around 14,500. So let's assume that wave 4 is going to complete around this range, and from here the 61, right, 38 to 61. Yeah, so 38 to 61 projection is around 21,000. So we might get so it cannot be the same height like similar to wave 3. So minimum we will get 20,000 to 21,000. So this is the range it is going to complete wave 5. We can expect somewhere here it will complete wave 5. And the time frame we don't know, like how long will it take. So that is a separate topic altogether. There is a time calculation also. We can through this Elliott wave, there is a time cycle also through which we can identify how long this might take, right? So but roughly this is where the wave 5 cycle might end. After that we might see a bigger crash, right? So from here we might get somewhere from this range we might get a bigger fall, and that will be for months to years. This correction will go on, and yeah, this is too early. So this might connecting the dots, right, with my previous session on the recession. And if that happens maybe in 2023 or end of 2023, and by then we will complete this wave 5, and then the global sell-off across globe, all the markets will enter into recession, and we might see this sell-off. So it's too early to predict, but there are chances, if as per this Elliott wave, there are chances, very high chances to happen like this if recession happens. And this may be in different structure. Whatever I'm saying, like it may not be this steep fall, it may or may not happen. It may be like so overall, whatever from the lifetime, right, from Nifty, it will let's say like how much it will correct, right? So from here to here, let's say the cycle completes somewhere in 20,000, let's say, and then the correction may be like 38 percentage, right? So the ABC cycle, so this, let's assume like we are completing somewhere here, the wave 5 is completing somewhere here, and then we are starting the overall global sell off, right? So it might somewhere, it might go like this, the correction phase, the bear trend, the real bear trend. Once the recession, something, if it happens something like that next year or whenever, I don't know. So if it happens, then this might happen something like this, the bear market, right? The real bear market will start, and we will see this phase for no continuing for another few years, right? So this is how it will go on. But for now, according to my reading, this is not the end of this bull run. Whatever we started from the COVID recovery, the bull run is not complete yet. That's what my sense is. We are going to bottom out around 14,500 range, and from there we will start wave 5, which might complete near to 20,000, right? In months time frame, within few months time frame. So this is on the possibility 1. This is first possibility. Now let me clear out all the drawings. So we have one more possibility. As I told, different people read in different ways. So we have one more possibility, which is, again, I will start counting again from here to here. Here wave 1, wave 2. This will be wave 3, and wave 4 we can expect somewhere deep, and then wave 5. So let me explain. Right, so this is usually wave 3 will be the lengthiest of all the other waves. So it may be wave 3 is completed here, and then we are in the wave 4, which is going to take so long, right? And it is the bear market is going to continue, and this will be there. When the more and more fall might happen, so it may not be in a single steep fall. We might see something like this, right? So it is zigzag, and then again corrective, and again it will go up, again it will come down. So overall, so this kind of structure it might form, right? So this is how wave 4, like wave 3 completes here, and wave 4, we are in wave 4, which we might see more and more downside, right? And this will stay for a long period also. After this 14,500 level, which is again correlating with the first possibility, we might see some pullback, and then again we might see bigger fall in the market. Then that we might assume like this is wave 3 and wave 4 is completing here, and then the bigger wave will start, wave 5. So this is another possibility in the Elliott wave analysis. But according to me, as per all the Elliott wave rules and the possibility wise, I would say like the first possibility is what more appropriate, wave 1, 2, 3, 4 and 5, right? So this is what I would say the possibility is more for this. And within this, as I told, we have wave 4 is in progress, and it might complete near 14,400, and then it might start recovery and towards 20,000, which may not be like immediately we will go and hit 20,000. This will take months. It might be like another 6 to 12 months also reaching this level. So we need to plan accordingly. So right, so we should not like immediately jump into call option buying and all. So this is long term plan. So this is not going to help in day trading, definitely. This is for investment. So those who are interested in buying stocks, and those who are not clear whether to invest at this point of time, or we need to wait for some more time, where the market sell off is going to stop, which level we need to start, or should I exit the share market. So all these kind of things, I think now it would have given some clarity, right? So this is the level we need to wait for, 14,400 to 500 range we need to wait for, and then from there ideally it should start wave 5. If that is not happening, if we are seeing further fall and closing strongly, something like this, if you are closing below this this level, then we need to recount all these things. Then it might be like the bear market is not over. It might see some pullback and further it might go down. So all those other possibilities we need to see in the upcoming weeks. We need to analyze further. But as of now, as per my analysis, this is a wave 4 and it will complete here and it will start rallying again from here to new highs, right? So I have started investment in last couple of weeks and I will continue. So I'm going to invest more and more my money in good stocks, fundamentally strong good stocks, and more towards FMCG finance sectors, which I have mentioned in the last video why. So I will be focusing. I will be diversifying my investment in different sectors, preferably in the consumer FMCG and finance sectors more. Again, this is my analysis, my reading about different global economies, how the situation is roaming around, and so it's my risk appetite, and as per my analysis I'm taking, and I request you to do your own analysis before putting your own money, and whatever you are you are going to get profit or loss, it's completely based on your analysis. It should be based on your analysis. So just I'm giving my viewpoint and all the other factors which uh, by which I'm taking this conclusion, right? So I'm giving all the inputs, and you have to do all your own studies and then take your own call. So please share this video to your friends and like the content. If you like the content, please hit the like button, and let me know in the comment box what are the other topics you would like to know. I will make more videos. Thank you.